Welcome to the Profit Beacon Overview, where you're going to learn why it makes sense to use the Profit Expert's automated Chief Financial Officer and get the critical information without spending thousands of dollars. I'm Sarah Strackhouse with Real News Communications Network, and I have the opportunity to sit down with Fred Parrish, who is, of course, the founder of the Profit Experts and the creator of the Profit Beacon. How are you, Fred?
I'm great, Sarah. Thanks.
Not only is he the co-author of the E-Myth series Chief Financial Officer, since 1980 he's held positions from staff accountant to CEO in both public and private companies. He's experienced in both operations and financial management. He's worked in a wide range of industries and at all levels of the organization. Through this, he's developed a proven process for refocusing the attention of the entire organization on the true profitability dynamics present and helped companies reach their full potential. So in the first video, we learned a little bit about the Profit Experts and how the Profit Beacon was created. But can you tell people watching again why it's so important for smaller companies to use the Profit Beacon?
Yeah, absolutely. Well, the main reason is that very few small companies have the resources to go out and hire a true CFO or in any form, whether that's full-time, part-time, some kind of virtual service that is provided. And so that really puts the owner, manager, CEO in a position that they are their CFO, whether they like it or not. And just because you call someone, let's say your bookkeeper or accountant or even your CPA, for that matter, your CFO, doesn't make it true. Because those people are mainly compliance oriented. They do debits and credits, the accounting part of it, usually pretty well. And on the CPA side, they do the tax return. So that's all looking backwards. It's all compliance. It's all really scorekeeping. What we're talking about here is the ability to look forward and have a predictive capability for understanding how we're operating today, and then if we are going to take any action or make some decisions that impact the company at different points in time, we need to understand what that means. And without a CFO, you have no way of seeing it. You're operating in a fog.
So what is the biggest mistake that you usually see from these smaller companies then?
Absolutely no planning whatsoever. That is the normal condition. Because again, they don't really know how to go about doing it, number one. And number two, they are mainly focused on either sales or production, whether that's a product or a service, and taking that to the customer. They rarely do strategic planning of any kind, and if they do, they don't do a terribly good job of quantifying what that strategic plan is going to produce at different points in the future.
Right. So that might be why you use QuickBooks as a beginning for this, but you incorporate much more, correct?
Well, right. QuickBooks is a very good small business accounting system application. And so it allows someone who is not a sophisticated accountant in some accounting firm somewhere to record all of the day-to-day transactions and keep it organized and produce certain reports. But again, as accounting data, that is historical, and it's things that have happened in the past. And QuickBooks does some budgeting, but budgets, in my mind, are not useful. What we are talking about is having the ability to have a dynamic rolling forecast where you can take into account at any point changes that occur. Because we know today how the company is operating, or you should. If you don't, that's the biggest problem. But we also have an idea about what's going to happen in the future, and we can do some planning based on that. But tomorrow or next week or certainly next month, things are going to change. Right. And so we need to be in a position where we can take those changes into account and look at what the new forecast is based on those particular circumstances.
So I'm curious to understand, and I'm sure people watching are, how the Profit Beacon does that and how it works. I understand at the beginning you have to answer a series of questions.
Right.
What paperwork and numbers do you have to have prepared to go through that first part?
Well, really, it's very simple. The first page is to update the company information. You have to choose an industry type there, and we use that for a particular purpose in the software. And then on the next page, it's just contact information. And then on the third page, it is some accounting information. What's the legal structure of the company? What is the accounting type, cash or accrual? Most small companies are cash. And then we have a question there about what was the cash balance at a particular date. And it changes from year to year. And the reason being is that our cash flow forecast is a weekly forecast. And so that week ends on a Friday. So in order to get the beginning cash balance, we need to have the last cash balance on the final Friday of the previous year. That really is the only information that you actually have to go to QuickBooks and get. I mean, everybody should know whether they're an LLC or an S Corp, C Corp, that kind of thing. Cash or accrual, pick cash if you don't know. Because if you don't know it's accrual, guarantee you it's not accrual. And then the last question on that page is, what is your comfort level of cash?
Okay.
And really what that means is, what amount of cash do you want to have in your bank at any point in time so you can operate without a problem?
That's a great question.
Right. So it's just a number that you come up with. You can come back and change those things anytime.
Okay.
But we use that beginning cash balance to make sure that the forecast ties back to QuickBooks, and we'll get into that in a little bit.
So tell me, what is that next step that, after you've answered those questions, what can you expect next when you're going through using the software?
The very next step is we load the data. And so that's all the setup that is required.
Wow.
So we load the data, and depending on whether you're using QuickBooks Online or one of the QuickBooks desktop versions, it will take anywhere from 2 or 3 minutes. If you have a very large file in one of the desktop versions, it could take 20, 30 minutes.
Not terribly long, though.
No, not long at all.
Yeah.
And it normally doesn't take that long.
Sure.
I've only seen that happen in a handful of cases over the last 15 years.
Wow.
It usually goes very quickly. And if you enter a cell phone number on the contact page, the software will actually text you when it's finished loading data and processing it.
Oh, wow.
So you can start the data loading and go off and do something else, go get a cup of coffee, go to lunch, whatever you want to do.
Perfect.
And the software will text you and let you know when it's ready to go.
I see. Okay, so then once you come back, everything's loaded. What does that picture look like? What does that screen look like?
Okay, so once the data is loaded, it takes you then to you have an option really of whether you want to go to an executive dashboard. And if not, if you want to adjust some assumptions, then you can click on that button. And then it will take you to, if you want to adjust the assumptions, you go to the revenue assumptions first, and there you can enter what you think is going to happen with your revenue. So the change from last year to this year to next year. And you can enter either a percentage or a dollar amount that would be a monthly amount, or both. You can actually enter a combination. And so you answer that question for this year and again for next year. So again, the question is, what is the change going to be, up or down? It can be either, from last year to this year and this year to next year. Then it takes you to the next page, which is the expense assumptions.
Yeah.
Exact same question. For all the categories that the software chose based on the industry type that you selected, you can answer the same question. Are we going to have an increase or a decrease on a percentage basis or a monthly dollar amount for all the different categories? And then the last page are some cash flow settings. And there are a few things on there. If you have bad debt, you can put it in. If you have some kind of arrangement in your contracts where you give specific types of discounts for a certain aspect of your business, you can enter that amount. And the software will adjust the cash forecast based on the answers. And then at the bottom of that page, we have the ability to vary when we're receiving the cash. So most companies receive cash on a fairly consistent basis, about the same amount every week.
Right.
But some companies, a good example would be a commercial real estate company. They're going to receive probably 98, 99% of all their cash in the very first week of the month. So we can make those changes at the bottom of that page, and the software will automatically adjust the forecast for those settings.
Yeah.
And then once that is done, you're ready to run a forecast. And you go to the forecast page and click on Create a Forecast, and it takes about 15 seconds to do all the financial analysis, look at all the mapping on the accounts, to produce a forecast based on the relationships that exist in the data. And you can get a 2-year monthly P&L forecast and a 2-year weekly cash flow forecast.
Wow. So I'm sure people love the fact that they can constantly update this, and there are so many variables for your specific business.
Yeah, absolutely.
Yeah.
That's exactly right. And the idea that you can go back and change any of that at any time, and you should. You should go back. It should be a process. It should be a cycle that you go through.
Right.
Load new data each month. As the accounting months are completed, you go and you reload your data up through the most completed month. Go and look at your forecast, make some adjustments if you want, run a new forecast.
Right.
Because it only takes about 15 seconds to run that forecast, you can do it numerous times.
Right.
You run one, no, that doesn't look right. Okay, so let's adjust the revenue here and these expenses and run a new one. No, that still doesn't look right. So it's a cycle. It's an iterative process that you can go through as many times as you need. So I was working with someone this morning actually, and they have run probably 6 or 8 different versions. And this is someone who has only been using the software for a couple of weeks.
Wow.
So it's very easy to use. It's very intuitive. Once you go in and just kind of play around with it a little bit,
Right.
you're not going to break anything. And you're not going to mess up your QuickBooks data
That's
because
great.
it only goes one direction. We don't send anything back to QuickBooks. You can run as many different versions as you want, and once you find one that you feel comfortable with on the revenue amounts, the expense assumptions, cash flow looks like maybe it's a doable scenario, then go with it. And next month you'll look at it again.
So it's truly, like you said, a way to kind of map out what you should be doing rather than just what was there in the past, like you were saying.
Well, that's exactly
That's
right.
huge.
And the really good thing and the really powerful part of this is the idea that we're using your historical data to forecast the future.
That's great.
Based on some changes that you're expecting to have happen. And so we analyze the historical data and determine what is a variable component, what is a fixed component. So for example, cost of sales in most companies are variables. So if you sell more of your things, whatever that is, then it's going to cost you more to produce that revenue. So those are variable relationships, and as revenue goes up and down, those automatically adjust because the software determines what is fixed and what is variable and what those relationships are. Then you have fixed amounts. Rent is probably the best example of that. Your
Sure.
rent is usually the same amount every month until it changes, and it changes according to a contract.
Sure, absolutely. So that's imperative information for business owners to have, especially if they don't want to be bogged down by having to go through the numbers constantly and all the time.
Right, and the real advantage to a business owner or a bookkeeper or accountant that doesn't have a finance background, they're really not going to understand how to go about doing this anyway,
Right.
because the financial analysis that takes place in code, in the software, is pretty sophisticated. How the accounts are mapped, how the analysis time frame is managed, is all done in the software. So you don't have to think about those more sophisticated aspects
Right.
of doing a forecast. You've
That's
got to do
great.
the historical analysis first, and then you can do your forecast.
That's huge. Well, if people do have any questions, it sounds pretty intuitive, step by step, but I'm sure there are going to be many, little maybe minor questions. If people do want to know more information, I understand you have a virtual CFO?
We do. We have a virtual CFO service,
Okay.
which if a company, and we have this happen all the time,
Sure.
they will go on and get a subscription to the Profit Beacon, and then they realize that, yes, this is exactly what I need to be doing,
Right.
but I need more detail. I need to be able to manage at a much more granular level because my business is changing in such a way that I can't get the precision out of the Profit Beacon. Being an automated application, in automation you lose some precision because a software, at least today, is not able to make decisions like a human. Now,
Shucks.
Right? Yeah, but AI and the artificial intelligence and machine learning and those kinds of things are coming to be more prevalent, but
Sure.
they're not here yet. And we will be adding some of those components.
That's great.
We're working on some of that now. So if they go beyond the Profit Beacon, then we do have another application that is much more sophisticated, and so therefore is much more complicated. And we have CFOs who manage that directly. And so we can provide a virtual CFO service where they get a live body who is providing that support. They load the data, they do the analysis, interpret what that analysis produces, and then will advise and coach that business owner and their team, if they want to have them involved, in what they should be looking at, what changes they should be making, and then predict what those outcomes look like. And we track that every month. The other aspect of the Profit Beacon is let's call it a dial a CFO service, where if you are producing a particular forecast and you want to get a certain output, but you've entered all your variables and it's not looking the way you want, or you've done this and you're not sure how to understand what you got, you can call a CFO and get some help, just in blocks of 15-minute segments.
That's great. That's huge. So how much are each of those services? And they're all available on the website, correct?
They are. That's right.
Great.
So the Profit Beacon is $49 a month, and we currently have a 30-day free trial. So
Right.
you really have nothing to lose. You go on, load your data, and we will actually help you walk through that initial setup process and help to answer questions that you might ask along the way, and then provide some ongoing support for a period of time. That's $49 a month. The virtual CFO service ranges from $300 to $600 a month. But the beauty of that, again, you get a seasoned 20, 30-year professional doing that work. And literally $300 a month is what some outsourced CFOs charge per hour.
Wow.
Right.
Wow. So you're getting a deal.
Absolutely. It
Right.
is, and the amount of information that you can get is really more than a business owner can really put to use until they get up to speed on the process. And then it's a very targeted, very focused process that we go through, but the results are really, really solid.
And I love the quote that you sometimes say that you're plugging the profit leak. That's
Right,
huge.
right, exactly. So, that comes from a book that I wrote probably 12 years ago, The Profit Mentality. And so the idea there is that every single company has these areas where we're just leaking profit, which turns into cash flow, and they're very small amounts, but they're everywhere. And so how we are able to plug those profit leaks and convert that back into more profitability, more cash flow,
Right.
is extremely important. So let me give you an example. if you take a company that has 25 employees, and each one of those employees every day wastes just $1. And maybe it's a piece of sandpaper or some kind of resin or something that you use in your process. It's not intentional, it just happens. Just $1 a day, 25 people. Over the course of the year, if your profit margin is only 5%, it will take more than $1.3 million of revenue to replace that lost profit.
Wow.
So the leverage on that compounding is incredible.
Yeah.
So plugging these profit leaks, where it's $1 here and $1 there, is a big deal. It is extremely important to do that.
Absolutely. It adds up.
It adds up
Clearly.
very, very quickly.
Well, if people have questions, I understand they can go to the Profit Beacon's contact page.
Yes.
Is there anything else that you think people watching would want to know?
Well, I think the main point is that anyone can do this, especially using the software. In the book, the E-Myth CFO, we explain a lot of the logic that goes behind how you would use the software and how you would go about this process. You can do it in a spreadsheet. Frankly, you can do it on the back of a napkin. It's going to take you longer,
Sure.
and you better have your calculator. But the point is, you need to start somewhere, because the vast majority of small companies have nothing, and they are operating in the dark. They have no idea where they're going, and that really sets that owner, manager, CEO up to make a fatal decision at any point in time. And they will not see it coming until they are months or maybe even years down the road. And by the time they look up and realize they have a problem, most of the time it's too late to do anything about it. So start doing some kind of planning. It doesn't matter whether you really have a good handle on it. The more you do it, the better you're going to get at it. And the better the data is going to be, and the better results you're going to get out of your company.
That's definitely some great advice. Fred, thanks so much.
Thank you, Sarah.
Yeah, of course. Thanks so much for watching. And as we said before, if you have any other questions, you can go to the contact page at theprofitbeacon.com.